So guys, good morning guys. This is 8:27. This is 8:27 my time where I am. So good morning to you, top of the morning to you. Welcome back to my channel. And I must apologize for not being consistent with the channel. Yes, I know that I have not been consistent with the channel. Man, a lot of things has been going on. So I've been working on a lot of things. But the good news is that I'm back now. So I'll be giving you back to back by the grace of God. So I'm actually going to be doing something like I'm going to be doing a series. Yeah, I'm going to be doing a series. By the way, I am Mr. Emoch, CEO of Emoch Forex Trading Academy. So you're welcome. I'm going to be doing a series that I will title liquidity concept. So this series is going to be about liquidity, everything I know about liquidity in the market. So I'm going to be making videos of it and uploading on this channel. So do it to subscribe to the channel and also turn on the notification bell so that you can always get notified when new videos are dropped. So this is let's just go straight to the point. Now this is GBUSD. Okay, what we're going to be talking about, the liquidity concept we're going to be talking about today is actually IFC institutional funding candle. Let me write it here. So we're going to be talking about IFC, which is what? Institutional. Sorry about my slow typing. I'm actually using a single hand to type now. Institutional funding candle. Yeah, institutional funding candle. This is IFC. Now IFC is a very important concept. It's a very important liquidity concept, in quote, liquidity concept when it comes to trading, especially when you are trading a volatile pair like the USD. You know, the market actually it's actually liquidity that moves the market. When there is no liquidity, the market will not move. So it is liquidity that moves the market. Now institutional funding candle is actually the candle that takes a high or a low before moving. Now the bone of contention is going to be institutional funding candle versus conventional order block candle. Yeah, because normally, because I'm an order block trader, what we were taught years ago was that the last down candle before the up move is your order block. The last up candle before the down move is your order block. So so that is what we were taught, the meaning of order block. I'm not saying it's not correct, but you know, as time goes on, the market is dynamic, it changes. So you must try as much as possible to be up to date. Now the institutional funding candle is actually any candle that takes out a high or a low, then breaks your structure. Yeah, I will still make use of order block. Order block is still very important. Now let's see something. This GBUSD 30 minutes. Now this is a trade I took on, was it on Friday or Thursday? Yeah, on Thursday. Yeah, on Thursday. I took this trade on Thursday, and this trade already delivered me 128 pips. 128 pips. That's all this trade already delivered me. And what was actually the brain behind this trade? Normally, there was when you go to your higher time frame, you see. You go to your, I don't want to make this video too long. When you go to your higher time frame, you see there is a break of structure. Okay, there was a break of structure here, another block, a break of structure here, and another block. Now if you can see, I didn't draw the other block. When you go to 1 hour time frame, you see another other block somewhere here. Yes, in the 1 hour time frame, this other block here was already mitigated. That's why it did not work out. But if you go to your 1 hour time frame or 15 minutes, I don't think I will, or 15 minutes, you see that price, okay, you can see there was already this movement already took out this other block. So the other block that was sitting here was the most interesting order block. Now let's just go back to it. Now there was a break of structure and I waited for a return to order block ROTO. That's the concept behind order blocks. When there is a break of structure, you wait for price to return back to your origin, which is ROTO. Then I went over to my 5 minutes time frame because my entry, whenever I'm using a confirmation entry, the entry is always on a 5 minutes time frame. So I went over to the 5 minutes time frame. I'm coming. Let me just quickly check something. I went over to the 5 minutes time frame. I'm sorry. Okay, it's still on. Let's continue. So I went over to the 5 minutes time frame. I went over the 5 minutes time frame and I saw something. Now head over to your 5 minutes time frame. This is it. I'll make this video too. Me, I talk a lot too, so I'm trying as much as possible to try not to talk too much. Now I went over to my 5 minutes time frame. Remember, I did not draw the other block. There was another block here which price already mitigated here. I didn't draw it. Now I went over to my 5 minutes time frame. I want to go to your 5 minutes time frame. There's one thing we look out for. We look for a change of character. Yeah, for the confirmation entry. Now if you can see here, okay, this was the high, this was the high, this was a recent high, and this was a low. Now for change of character to be confirmed, the price action was supposed to clear down this low for this 5 minutes change of character to be confirmed. This is a wider picture of the 5 minutes time frame. This is actually a 5 minute swing high and a 5 minutes swing high. Now, but then we went over to the microstructure and we saw that there was already a change of character here. So this one was not necessary anymore. I'm just trying to break down this trade with the concept that I used to take the trade. Now there's a 5 minute change of character here, 5 minute change of character here, and price broke this structure. There was a change of character here. I actually missed this trade. I wasn't on my chart when this happened, so I missed this first entry. There was a first entry here. I missed this first entry. So when I saw that I missed this entry, I waited for another break of structure, which eventually happened here. There was a break of structure here. Just hope you guys are following. I don't want to make this video too long. There was a break of structure here. Price broke structure, and we identified the order block. Now there comes our IFC that I was talking about, the institutional funding candle. Now normally, conventionally, your order block is actually the last up candle before this down move. That means conventionally this was supposed to be my order block from year to year, but no. Now look at this white candle, this other white candle. This is the actual order block, because this white candle took out the high of this candle and also took out the high of this candle. You see, whenever you are trading, you must always try as much as possible to take note of liquidity. Any candle that takes out a point of liquidity, if it's a swing high, a swing low, Asian high, Asian low, trend line, or whatever liquidity, that candle is the real order block, and price will definitely come back to that candle. Although I didn't, okay, now I placed my entry here because of maybe spread, because sometimes because of spread it might not be triggered and all that. So price actually came back. You see that price was almost violating this conventional order block that we all know, because we all know that this candle is our order block. See, price was almost violating this candle that we all know and was coming to here, and eventually price was entered this our IFC, this white candle, which is the white is my bearish candle and the blue is my bullish candle. So that is it, guys. Whenever you see something like this, you must try as much as possible to take note of it. So that's pretty much it. I don't want to make this video too long, so thank you very, very much for watching. Please like, you share, you subscribe, and thank you very much. Until I come your way again, I remain Marvelous Uche, Mr. Much.